How's it going, everyone? It's Sam. We are looking at how to make $100 a day in crypto passive income. Now, the last couple weeks, last couple months have been stressful for a lot of people in crypto. And I know when that happens, it sounds really nice just to be able to sit back and relax and get passive income coming in without having to do anything. So that's why we're going to look at different ways, creative ways to make passive income here today. Some are higher risk, some are less risk, some pay you a lot, some pay you a little bit less. We're going to take a look at all that along with the three major risks that I see in crypto passive income that you can fall prey to. So we're going to hit on that towards the end, but first we're going to look at how much of each of these cryptos you actually need to make a significant amount of money. Now, if you guys don't mind hitting the like button and subscribe button, I really appreciate that. Join us on the channel here. Also, let's just get into it. Okay, so you want crypto passive income. There are a lot of different ways to make it. So we're going to look at stablecoin, we're going to look at cryptocurrency, and let's get into the chart here. So first of all, the five different cryptos we're going to look at are Cardano, Ethereum, Solana, Bitcoin, Avalanche. Then we're going to look at some stables and then look at a couple creative ways to make passive income. So we're going to look at a couple different things. First of all, let's look at the APY, how much you would actually have to invest to get $100 a day and the amount of those tokens. So right now for Cardano, you can make about 5% APY by staking Cardano. And I'm sure there are higher ways to do this. There are other ways, but this is generally what you can get from delegating your Cardano to a stake pool. You would need about $730,000 at today's prices to get about $100 a day. So that would be about 737,000 Cardano. So that's a lot of money. So I realize that that's not for everyone. But if we go down the line, we can get a little bit higher in some other areas. So Ethereum, generally the same thing. You would need about 266 Ethereum. This is in Ethereum 2.0. Again, there are some other ways to make more in DeFi, but these are like the simple ways that most people are using here. Then Solana, you can get a little bit higher, 5.8% for staking your Solana. That extra 0.8% will mean that you need $100,000 less. If we go over to Bitcoin, there are a couple different ways you can do it. I'm going to assume that you use an app like Voyager, which is where I'm getting these numbers, about 6.25%. That would mean that you would be able to only invest about $584,000. This is assuming you're part of their loyalty program and stuff like that, and you're getting the most out of your dollar here. So about $584,000. You would need about 15 Bitcoin. Now, Avalanche pays a significant amount more. It is about 9.2% for staking. That would give you the ability to only put in about $400,000 and you would get $100 a day. Again, about $36,500 throughout the year. Now, there are some other creative ways of investing in cryptocurrency, but I think we should look at some of the risks real quick before we go into the higher paying cryptos. And some of these pay a significant amount just because there are some major things you can fall prey to, and you can lose a lot of money if you're not careful. And I feel like I need to hit on this before we get to some of the higher risk, high reward ways of investing. Attention all crypto holders. Do you buy crypto? Do you like crypto? Do you invest in crypto? Check out the link underneath the video to Choice app. There you can invest your crypto assets in retirement accounts. So that way you don't have to pay taxes. A lot of this staking and a lot of the stuff that we're talking about here today, you have to pay a large amount of taxes on when you eventually sell, most likely. However, if you're able to invest in an IRA, you don't have to deal with that. You can also make money a few different ways because they will allow you to play this game Blinko, which gives you free Bitcoin every single day. They increase the reward. Some people are literally getting 1,000,000 sats, 1/100th of a Bitcoin for free sometimes when they run different promotions, but you can get free sats daily. If you are investing in crypto and you can invest in IRAs here in the US, you should be using this. Of course, do your own research, but this is something that I highly believe will save a lot of people money. If you use the link underneath the video, you can get an extra $50 when you sign up and start depositing. So definitely check this out. So what are the three major risks that I see in DeFi and in cryptocurrency when you're trying to get staking rewards? One of the biggest ones is impairment loss. If you haven't heard about this, this is when the value of the token that you're getting is decreasing in value. So it actually isn't worth staking. Let's say you're losing 20% a year consistently and you're getting 10% APY, or even if it's 19.5%, it's still not good because you're still losing money overall. Some people fall into this trap with dividend stocks. If the underlying company is not strong, but they're paying a really high dividend, some people fall prey to this. If you're falling prey to this in crypto, it might be that you're going for one of those 8,000% APY tokens, but because it's giving you 8,000%, it's inflationary to a very high degree, and you're actually losing a lot of money over time. So you have to be careful about this. Just because it has a high APY and you can make a lot of passive income doesn't mean that the price of the underlying crypto will stay the same. So I think the most important thing when you're looking at different cryptos is to make sure that the underlying project or the underlying cryptocurrency is solid and is going to grow over time. So the other thing that you can fall prey to are rug pulls. Be careful. If someone has a significant amount of the overall supply, they can rug pull and you can lose a lot of your money. Also, smart contract risk. There are a lot of hacks that go on. If something sounds to be too good to be true, or it's not been around very long, or even just putting all your money in one spot, in DeFi specifically, CeFi is a little bit safer, I think, but putting it in DeFi in one spot, I think is risky. So you have to take all this into account. Now, let's get into some of the higher paying ways of making crypto passive income. So first of all, let's take a look at just getting USDC. So USDC, you can get a lot of different places. You can get an APY of about 10%. This is more of a centralized stablecoin, and you can get about 10, 12% various places. You need about $365,000. Now, there's very low risk of impairment loss. The thing that you would have to think about here is if it lost its peg for some reason, it's pegged to the US dollar. So instead of $1, it traded for 0.95, which I think would be difficult. That is one thing though that people worry about. If the whole crypto market falls down and there's a panic moment and people aren't even caring to get $1 per USDC and they're trying to sell out as quickly as possible, that could be something that happens, that it would lose its peg. The next thing is UST. So this is something that I invest in. This is something that I hold. This is another stablecoin. It's part of the Terra ecosystem. And what you can do is you can go get 19.5% on Anchor Protocol. This is something that I do. I've shown it many times. You can actually see it here. I have about $134,000. So this pays about 19.5%. It fluctuates a little bit, 19.5%. And the risk of this is that it loses its peg or they lose a lot of their treasury. They have various ways of making money, but if they aren't making as much money as they are spending on this 19.5%, they might have to lower that APY in the future. Now, someone just put in about $500 million worth of money for the rewards, so they should be set for a while. The next thing you can do is use something like Donkey Protocol. There are a bunch of different DeFi apps or dApps that allow you to invest and get higher yields. So the reason I bring this up is because I use Donkey myself a little bit, and you can see on the Phantom network, you can get 32% on USDC. Now there are a bunch of different ways to get even higher APY than that, but we're just gonna go with 30% to be a little bit more conservative. So 32% means that you would only need about $114,000. Now, this is more risky in my opinion than UST or USDC on a CeFi platform, but that is not an insane amount of APY that I would be very nervous, but still, I think whenever you go into something like this, you have to realize that it is higher risk. And then the highest amount that I'm gonna show here today, and there are other ways of making more than this, is using something like a Bitcoin miner. And you might be wondering, how can you get 35% from a Bitcoin miner? Well, these Bitcoin miners make about $15 a day at today's prices for Bitcoin. With that being said, if you make $15 a day after expenses, which is true, if they cost about $10,000, and when you take into account how much you would have to pay to buy another Bitcoin miner in about 5 years, because they only last 4 to 6 years, you would get about 34% a year, 35%. So again, take 15 times 365, subtract $2,000 a year. That's how much you have left over. It's about $3,475. And if Bitcoin's price goes up, that APY is going to go up. Also, if it falls down or as more miners come online, that's going to fall down. But when you consider this, you would only need about $105,000 right now to start making $100 a day. Now, with all this in mind, it's important to remember that the prices of these cryptos can change. So for example, with Solana, you need almost 7,000 Solana here today, but if the prices change, you need a lot less. So Solana's price right now is about $91. So you need that 7,000 Solana to make a significant amount of money, about $100 a day. But if Solana's price goes up to $150, that means that you need significantly less Solana. You would only need about $381,000. Now, if it goes up to 260, which is its all-time high, you would only need about $220,000. If you have a $500 Solana, you would only need $114,000. And then if it goes up to $1,000, you'd only need about $57,000 today to buy that Solana. Now, this doesn't mean that you should go try to find a crypto that's being down really heavily or one that pays a really high APY. It's just something to consider when you look at these assets, these crypto assets, versus something like USDC or USDT. These are not going to fluctuate in price, hopefully. These will. So the question is, do you want to invest in these specific cryptos? Because they can fall down on the other end too. If you invest $630,000 today and then Solana goes down to $60, well, you don't make as much money. So that's just something to consider. Now, let me know which of these sounds most attractive to you, which one you'd want to do, which ones you're already taking part of now. And definitely check out the link underneath the video to Choice app. I really think it is valuable to a lot of people because you can invest in cryptocurrencies in retirement accounts. Definitely check out that link to get that free $50 too. And I will see you guys in the next video. Bye.